when he says go bigger, you think of an institutional size. So I'm buying 20,000 square foot self-storage facilities. That's our average size property. You're building 200,000 square foot self-storage facilities. Some of your sites that you bought were 10, 20, 40 acres. So when we say big, this guy went very, very, very big. This is Jay Schuminsky. He sold, let's go ahead and have a seat. Before we drop the bomb of what happened about a year ago and what you did, started planning for about 2 years before that, let's go straight into the thick of it. You are 30 years old. Your father is a scrappy, you called him like the epitome of a sweaty startup, grit entrepreneur, real estate entrepreneur. He held a mixed bag of real estate, some storage, some retail, some opportunistic investor. And you're working in the back office, 30 years old, and your father tragically passes away. And you are forced to take over the family empire. Let's start there. Let's start with how you did that. I mean, the story is incredible. We're going to get to some of this. But you're 30 years old. You're put in charge of how many folks were at the company, how much real estate. Let's just dive right in.
Thanks so much for having me. Really appreciate it. So they told me I was going to be able to talk storage, and that's why I came. I did not know all of you would be here. My wife's just happy because she's sick of hearing about storage.
He thought he was going to talk to like a college class at first.
I guess not. So yeah, no, it was, I was involved with the business before, with some marketing, and again, we were, you know, my dad had a wig business and made some money, and then that was in the 70s and 80s, started trying to buy real estate, and, you know, very cap-driven, very, you know, there wasn't quite a central strategy, and I wasn't as involved with the storage. I just wasn't as needed. It was my kind of my dad's baby. My dad actually had some land at one point in Amarillo, Texas. Got it for like dirt cheap. Needed to have something to put on it. How about storage? So Amarillo, Texas was my dad's first storage, and you know, he had no blueprints. Just decided, hey, let's do it. What's the worst that could happen, right? So you know, we were very analog, and you know, so. The first thing, like, hey, what do we actually have here? We had about 20 storages, 10 were in Amarillo, and 10 were in DFW. Some of the DFW ones were actually, we had some retail. We had a bunch of retail spaces empty. My dad says, hey, let's take a storage. I like storage, it's working in Amarillo. Let's turn the center, which again has a big vacancy, into storage. At the time, you know, a lot of cities were a little bit more amenable to that, right? And
they hate storage investors nowadays, but
hate it. I wonder why. You know, so it started there, and you know, hey, we had no internet connection. We had yellow book advertising. We were old school. I mean, we very small back office, no acquisitions guy.
How many employees were working with you?
We had 10 in the back office, but mostly just, you know, council, you know, we had, you know, everybody's kind of supporting the storage operation. So it was very different. So, you know, at first, you know, we had a property under contract. I let it go. I didn't know. I didn't want to build a property I wasn't sure about. I had to figure out what I was going to do.
And this is 2011.
2011.
Yep.
And then, you know,
everybody looks to you suddenly to lead the company.
It was hard. It was hard.
Yeah.
My dad was my best friend, small family. You know, I have nobody else in my family. So again, very, very lucky, but it was one of those things where, oh wow, I don't want to mess up. And, you know, again, I was more scared of, I think, failing than anything else. Okay. So,
and 2011 was a real estate a trial, so there's some opportunities. What did you attack first, and what direction did you decide to go once you got your bearings, assessed what you had, and you decided let's build an empire?
Same thing. Let's buy 8 caps, shopping centers, and try to and.
It started with shopping centers.
I bought a couple shopping centers. Didn't feel great about them. Said, hey, how do I not have to, I don't want to compete against everybody else. I don't want to go to stuff that's at market, be the same, you know, same strategy. How do I come up with something different? So looked at storage really closely. Hey, why are we doing this? And again, I think previously I heard a lot of like, hey, no, this is the way it's done. Like, no, you can't do this. No, this is, so I think I went ahead and I questioned a lot of things. I looked at kind of how we were doing on certain of our existing sites, and I was like, hey, zoning's getting harder. Let's come up with a strategy here where, I'm able to bite off with one more, like instead of doing a phase 1 and a phase 2, let's build larger facilities. Let's go a little more vertical, go bigger.
Just why? Like you could go around, buy storage, it's out there, you're operating, you have the stress of running the management company.
Right.
What makes you say, you know what I'm gonna do? I'm gonna build double the size of an institutional size property all in one go.
I got looked at of kind of funny in the beginning. And again, it takes so long to build, like the strategy was kind of questionable from the beginning. Like why are you doing this? It's a big bet. And so,
the town planners were looking at your plans like, is there a typo here?
It happened. And lenders, like, so normally you do a phase 1, hey, it's successful, do a second phase of the storage. I didn't want to do that. And I looked, hey, I like this location. I think it's gonna be good long term. Let's bet on it. And let's make the infrastructure, let's create systems, I create a new prototype for our building, which is vertical. My office was a big 40-foot high box with flaps.
If you have your iPhone, Google all storage right now, and if the first thing that'll pop up is a box with flaps, and that is not a box that's the size of this room. It's about 3 or 4 times the size of this room. You drive by the highway, you see these giant boxes in Dallas, Fort Worth.
We trended on Reddit for a little bit. We trended. There was some really good stuff.
So this is 2011. By 2012, you'd broken ground on a couple of these properties. And it takes a while. Development takes a really long time.
Yeah.
So there must have been some hard years there between 2011 and 2015 when some of these were starting to lease up and really produce, and you can recapitalize them.
Yeah, no, it was, and again, sucking cash flow. Again, kind of part of the strategy. I mean, you don't want to necessarily, make money. You want to have a little bit of a tax shelter. You want to lose a little bit sometimes, if you have other stuff to support it. But yeah, no, I made a pretty big bet on it. And the problem was, if you're starting a bunch of sites at the same time, they're all going to come online at the same time, which operationally, how do you figure out? So, we had to really figure out like systems and we used to have just one main person overseeing and then people out of site and didn't have any, they were just supposed to sell you. I mean, I would call a site and I'd have to ask, cold call, hey, I'd have to tell them what kind of unit I wanted. They weren't selling me.
Your own people?
My own people.
Okay.
And I was just like, I was so upset. I'm just like, but again, I realized, they didn't have the tools. We didn't have this, so we created a call script. So we really went, hard on technology and created a kind of process. And, we made a big bet, right? I mean, we made a big bet on hey, we can do this better. Our management company can figure this out. We looked into everything from, we created, an internal kind of phone system where it would roll between, sites so our people would answer. In an IVR, we had a, backup call center just for the overflow. We could lease over the phone and lease online, which was big at the time. So we were really trying to be ahead of a lot of those things.
We could geek out on this all day because you're talking to me like a true operator. You have so many folks who think about real estate as passive. I'm going to put my money to work. You're thinking about, this is a business. I need to innovate and run a really good business.
And the believing that thesis is something I really saw in you when I started seeing you on Twitter. And it was like, wow, this guy's sharing his playbook. And he's kind of looked at something where people were like, that's too small, or hey, this doesn't work, and made it work. And made something that was kind of, not necessarily considered a gem into something that was very valuable, literally, figuratively. I mean, how did you, when you first kind of created that thesis, people thought you were crazy? Oh, nobody's gonna use this, there's no need for this? Like,
yeah,
what were you saying?
The internet's coming on in a way that it was in 2011, 12 when everybody had a smartphone and they could call your places and start to rent. It was just more advanced, and these small facilities had been, pretty ignored. So here we are in 2022, going into 23, and the REIT last week just bought a portfolio of remotely managed self-storage facilities, which is encouraging, scary, a mixed emotion for a lot of the self-storage investors here. But yeah, it's all operations, right? It's finding a way to run a business just like you did. So yeah, 2011, 12, 13, you're building. At what point was it just like, okay, I'm going to double down here, and we're not just going to have 20 properties, we're going to build 50 of these. We're going to have over, over 5 million square feet of storage.
We had 8 million square feet at one point.
8 million square feet of storage. So you had many chances to cash out the self-storage portfolio.
Absolutely.
People, from 2013 to 17, storage was very hot. It was growing every year. There was so much development, so much, it was frothy back then. It's even frothier now. But like.
Thanks a lot for that, by the way.
Sorry. You were, you had to turn down generational wealth from brokers, from people who wanted to acquire your property. And at first it was 5 million, then it was 10, then it was 20, then it was 50, then it was 100. You fast forward to last year, we'll just go ahead and tell people what happened. A news article, what we can all find online when we Google Jay Schuminsky is, you know, a man might float his portfolio for $1 billion. Well, you weren't sure about that. You think, I think it might need to be 1.3 billion. You tell me in the back that it started getting bid up and you closed this portfolio a year ago for $1.5 billion is what you sold your 50 self-storage facilities, 8 million square feet of storage. And just as a testament to how crazy this man that I'm sitting here is, he didn't go on vacation. Everybody's calling him after the closing saying, you know, congratulations, are you gonna go to Venice? Like, what are you gonna do? And he says, Nick, I'm gonna 1031 all of this money. True real estate a tax hater like me. So no, you're gonna 1031 this. Much of it into multifamily, which going from storage to multifamily, you don't hear much of this. They didn't have a non-compete, so you can now build storage from the ground up. And the last 2 years of your life has to be probably the most stressful time period of your career. Is that safe to say? I can't imagine doing a 1031 on 52 self-storage properties, all these tenants, and trying to deploy $1.5 billion, maybe you got 900 million in equity in these deals. This is mind-blowing stuff. What were you thinking? Like, lead us up to that. Why did you hold out so long? What made you flip and decide, hey, I might be open to selling this thing?
So I had actually sold some of the West Texas Amarillo sites a couple years earlier, maybe 2019. Had it under contract the day the pandemic hit, like hard, and like, you know, it was like, wow, I finally get to, you know, get rid of these sites, and we'll kind of come back to this later because they're tertiary. A lot of the big guys weren't interested in those kind of markets. And you know, previously, the stuff wasn't sellable, is what I'd heard from, you know, when I had the discussion. So I finally sold those. Wow. So I was very stressed about having to spend, you know, great problems, but $50 million and 31 money, right? So I dealt with this broker. He actually queued up a couple deals for me. You know, really kind of created a good relationship with him, and you know, so later. Again, this portfolio, which I really didn't build to sell. You know, I had CMBS debt on some of the stuff. Like, I really thought, hey, long term, if I build it for this much and finish it and get it entitled, it's gonna be worth this much when I finish. And yes, it's gonna take a longer lease up than your normal, you know, 2-year lease up, right? It's gonna take longer than your maybe 3-year. But over the time, you know, if I am patient and I believe in this area, which I did, you know, and my costs are going to be covered, you know, at maybe 50% occupancy, right? Everything else is gravy because you have the same fixed costs. So, hey, I'll wait it out, no hurry. I like where I am. I like these properties. And again, I was, to kind of fund these, I was doing other deals, and I was like, you know, I would flip stuff, but I would do a construction exchange. So, really like the 1031 exchange. So that's, you know.
You're 1031ing into a construction project. So, meaning I'm going to sell this property, we're going to have a profit, and with the profit, I'm going to go roll it into a construction development project.
So what you're able to do is you can buy the land separately or 1031 land to land, and then if you sell something, so I would have these projects ready to go with a permanent hand, and I would find, you know, this a buyer for some, you know, it could be an industrial property. So other deals I'm doing on the side. So we have creative office, we do some other stuff, maybe some things that didn't fit in the portfolio as well.
You're a deal junkie.
I had to fund these. I had this huge pipeline.
Yeah.
Didn't really think about how to fund it, right? So, you know, I was getting out of stuff that, hey, I think this is maxed out. Hey, this Walgreens, if I wait till here, they're going to have a kick out. I want to get out before. I'm gonna go ahead and sell it, and on the, so again, I'm gonna control my own destiny. And what you can do is you can go into the building. So if it's $5 million, I can do a $5 million investment into the building itself, and the building will do a land lease with the land. So basically, you have two different entities, and you can't collapse them for a couple years for tax reasons, but basically you have 6 months to spend, in this case, $5 million on the building, said construction, and you have to completely spend that all within the 6-month time period from the day you complete your sale. So I really like that. It was a way where I can, control my own destiny, invest in my own pipeline, and I was.
Your wealth snowball is rolling down a hill. The wealth is adding up, and instead of taking huge slices off of it when you sell something, you're able to keep it together and keep it accumulating.
Right,
compounding.
right, yes. And again, if you look at, some you take accelerated depreciation and, some stuff, it's legacy stuff where, hey, wow, this is, my dad had this property, I need to figure out a way to make it tax efficient. So yes, that really helps tax efficiency. So, so this broker, I think the thing that first started me even talking about this thing was the
potential to sell this thing.
Yeah, Simply Storage, when they sold for what they sold for, good properties.
It was a blockbuster deal.
Blackstone really, making and again, they wanted a banner. Like they bought the Simply platform. They saw value in that, overpaid probably a little bit for the name of it themselves. I'm like, and then right about the time, Easy Storage was huge. So I'm talking, hey, like, not ready, but just if you find somebody who needs a name or needs something like that, just tell me. I know I'm a couple years away, max. Like I've no.
If there's a Blackstone out there willing to give me $1 billion,
and that was
tell
kind
them
of
to call me.
That was kind of the question. For some price, like I was like, maybe, right, but it wasn't, So then the guy, my broker who I had a relationship with wasn't just some guy. It was like,
I bet your relationship with your broker is a little better now.
Yeah, he answers my calls.
Okay, so we talk all the time about developers especially. It's a long capital cycle, incredibly capital intensive, cash poor, asset rich. Were there times when you're building this snowball so quickly, you've built 50 of these giant things, maybe you've built 40, are there times where you're like, wow, I'm literally doubling down after doubling down after doubling down to go bigger and bigger and bigger? And is it stressful, or were the early assets producing so well that you felt well capitalized enough to proceed?
The systems really helped. We really were able to better leverage some of the older assets to points we just weren't before. So having some kind of revenue management, right? Having
cash out refis to fund.
No, the revenue management. So our rates. So rate management. So,
but these things are performing, you're like driving rents,
correct.
They're more valuable,
Correct.
you can go to the bank and you can pull out a couple $1 million to go.
Correct. So able to pull out on the existing assets, which again, assets, we made them more valuable, right? By doing something, by rebranding, by having, so All Storage was a brand name. And again, because we had so many in the one area, it was very recognizable. Plus we had the same staff. So one district manager could have, 15 sites because they're all within a drive, right? Mm-hmm. And some were probably too close, but again, we really kind of committed to areas, right?
So revenue management, the key of self-storage, you were early, and you've talked about how operationally that's one thing that we got right. Talk briefly about revenue management.
No, I mean, again, just it's hard with smaller sites, hey, you can price stuff and do it manually, but it's portfolio wide, you have to have these kind of safeguards because people don't know how to price stuff. They won't want to push stuff. They won't, ECRIs, which are for existing customers, your managers are not going to want to push those. But again, if they have the computer to tell them, hey, this is what we think it should go for, they're going to do it. If you have it on inventory, when you're going down to, from 5 units to 2 units vacant, it's worth something more, right? So the whole supply and demand factors really kind of fuel that, right? And then, we also create these sales dashboards for our people on the phone and for people in the sites. Like, hey, this is how you're doing in real time. If you get these and these KPIs, you're getting bonused on each of them, right? Mm-hmm. So we really also tried to kind of bring buy-in for the employees and kind of show them like, hey, like you do better, we do better. And we really started marketing too, like pretty good marketing. I mean, we were able to attribute certain dollars for marketing spend. Mm-hmm. So like, I mean, if we have the ROI I was fine spending it to lease things up. So
And you guys would do funny things inside of your customer acquisition process. You would do funny things. They'd get funny text messages, and that led to PR and like your brand recognition, similar to what Manhattan Storage does in New York City, how they have those really funny, weird, edgy billboards. You all were having fun with it.
It tried to be a little irreverent. I mean, we have this big box on the side of the road, like,
Huge
I mean,
box.
just like, yeah, I mean, it's, cities love that, by the way. So, I mean, yeah, we did get some pushback on zoning because are they going to put a box here? We're like, no, just don't worry. So we didn't get those in all locations, obviously, but fun when we do.
Speaking of development and zoning and dealing with towns, speaking with many of the folks here, when they tell me they're developers, I have a whole new respect for the developers because I know the brain damage that it takes. My partner and I, we built our first facility. We tried to build 2 more, massive failures, waste of time. We learned a lot. You had to have some horror stories of getting these things built, problems. The most competent people in this room are the developers, in my opinion. A huge shout out to what they do. You guys built a lot of huge buildings very fast.
I mean, it's if this thing is owned by right, I mean, it's more valuable. The entitlements are worth something. I would say to people, I mean, it's blood, sweat, and tears.
What's the hardest deal that you dealt? Do you have a quick horror story of?
I mean, it's just too many to count. Just getting utilities to your site. I mean, just the city's promising things to you, and then we're just kidding. That's not. You guys have it in a letter. Yeah, we messed up. Okay, so it's one of those things where it's just not developer friendly in a lot of ways. And some of these are in Texas, right? You would think Texas, but yeah, no, I.
How did you fund your growth? Did you have any partners at the time of sale?
No partners. One legacy deal, and we did a buy-sell agreement, so I could trade out of that as one of my, 56 1031 exchanges.
All right, so you got to tell us. I want to hear about this, the jigsaw puzzle, the Tetris. I mean, when you're 1031ing and you're like, okay, I'm going to get 1.5 billion. I got to find a way to place this. I only have 800 or 900 million of equity. I got to find some debt as well. The clock is ticking. Tell me, were you sitting in front of a spreadsheet, like trying to figure out what added up to what?
Literally a spreadsheet. So, each property you're taking, you're actually bringing with you to the new property. The way to do it is as a tenant in common. So you have multiple tenant in commons. For the equity, you have to replace the same debt. So again, to spend that kind of dollars, you either had to buy a portfolio. So first I had to figure out what I'm going to buy. And again, the construction exchange was no longer an option. I thought storage is going to be a big part of it. I mean, storage just got too crazy. I mean, storage. I mean, it's
We were prepping for this, and we were having a quick conversation, and you used the word frothy with storage, which kind of made. How do you feel about storage right now? I mean, you can't be too bullish if you just traded out of almost all of it.
Yeah, so we have 5 more. So I didn't end up selling my pipeline.
They let you keep that too?
They let me my pipeline. I had it in a separate deal, and
the brand name.
There's not, brand name I'm keeping. There's a non-compete though in that pipeline deal, and we ended up not going forward on that. So I'm pretty happy about it actually. Like at the time, again a lot of money, but like I do want to be back in storage. So we just opened our first one since the transaction in Saginaw, Texas.
He's back. It took him 8 months.
As an all storage. So.
As an all storage, same brand.
Storage. Same brand, but we're trying third party for a change just because we don't have scale. Mm-hmm. And to try to open up some of my time, because that was over half my time.
Before we talk about your life now and what you're trying to manage, because a lot of people here are capital allocators, a lot of people here are generating serious wealth, going to think about how they might want to diversify. Why multi?
Yeah,
so that's a big bet.
Yeah, no, I mean, so at the time, like there was the same cap rates, primary and tertiary markets. Even the value add self-storage properties were within points of the same cap rate as these brand new Class A deals, right? So again, I love storage more than the next guy. Like you're my new best friend. So you just don't know it yet. But
I'll take it.
But I'm just looking at this is brand new stuff. I don't have to do run through the property. I don't have to do the inspections. Everything's under warranty. I'm getting this for the same cap as, an old secondary. So it just,
And you're talking like a big old 80s vintage property in Yuma is trading the same as a downtown Phoenix.
everything, the market was so efficient at the time, and this is the end of last year.
Everybody's getting the same debt. Everybody's got the same management.
The caps are the same everywhere.
Wow.
Are you seeing that too nationally? Like, I mean, with the sophisticated buyers and sophisticated brokers, I mean, the cap rates were the exact same.
Technology is leveling the playing field in storage from the small deals to the bigger deals, and it's frustrating for us. I mean, I'm as bearish on self-storage as I've ever been, just because it's so hard out there right now. But okay, so you saw the same opportunities in the small towns as you did the big towns. Chose the big towns. That's a good bet, and a lot of development. So
Yes, a lot of C of O deals, and we, luckily I was able to. We got 1 4-pack, so 4 big buildings at the same time,
right.
which was helpful,
it's
right?
a little easier on the spreadsheet of 1031s.
And some of them you could buy when they C of O or got the certificate of occupancy, which gave me time to actually work on the closing. So again, not closing all at once was great. So our deal officially closed on December 1st. I had my first 1031 lined up December 2nd. So
If that would have closed 2 days later, you would not have had the money.
I would not have had the money to. Yeah, I would have lost my fully hard $3 million deposit.
So you're about to make $900 million, and you're trying to buy a building, and you're just please close.
Yeah. No, it was a little. Yeah, it was trying time. And again,
you're running out of one closing with a check. I got it. I have it.
My escrow company, instead of sending it to the accommodator, had to directly wire back to the and again we have every property is a tenant common with the so the financing, because you again had to replace existing debt, like, so it was pretty wild, right? And I mean,
I'm stressed out just sitting here, and I wasn't doing it.
Well, plus not also having an understanding. Like, I had a system with storage. Like, I had everything. We had everything to roll up. We could see everything from one place. We didn't have that.
You went from a relatively stress-free operation of managing these self-storage facilities. You know what you have the people in place, you have the team, to now I'm going to go buy a multifamily here. I'm going to go do a ground-up storage here. A couple other asset classes as well, or no? Just storage and multi?
Yeah, we're doing more stuff, but again, it's just the problem is, like, how do you figure out, how do you not,
How have you made that mental shift from, okay, self-storage operator, to I'm my own family office now? And you said something super fascinating to me in the hallway. I don't have a money manager. I don't have a consultant manage my wealth.
I mean, I'm 90% real estate and the other 10% real estate. So believe in real estate. Believe in real estate with you folks. How about you? I mean,
what would you tell me?
How do you make the same decisions? Because again, you're really good. You're elite at this one thing. Can you hand money over to somebody else to do? And again, how do you take the same question you asked me about taking money off the table? You've created generational wealth. I mean,
so I'm going to use this as an opportunity to ask you to answer a personal question about me. I get me and my business partner Dan, we've had a heck of a 3-year run here. We've seen our net worth explode, all because of the bull run in storage, right?
I think you played a little bit of part in it. Just to...
we could talk about that. I don't think I did, but many people tell me, Eric Weatherholt's a good friend of mine, we were fly fishing the other day, and he's like, Nick, why don't you sell and put $20 million in your bankroll? And I was like, first of all, it's not that much, but second of all, my life wouldn't be a whole lot different.
More, right? More? You can tell us.
Like, how did you think about that? Okay, you sold some things. Did you ever, like, okay, I have the bunker money set aside, now I can go have fun? You kept doubling down.
You first.
I'm asking you, like, should I sell or should I hold? It's scary out there.
Yeah, no, I think I know you're half teasing. Again, when you trust the assets, I mean, I think you can play around. Obviously, there's the kind of wealth growing part of your career where you're really out chasing more, and again, the risk and cap rate affects the the return. Obviously, it's been interesting. Again, very hungry. We're both still young. Stopping, especially when you trust in real estate and all the advantages it gives you. I feel safe with the real estate I have for the most part, right? And it's one of those things where I can control allocation to the stock market. I I'm not very good with it. I don't understand it. I can't keep it. It's not my business.
I
don't have
recommended I recommended everybody buy Facebook and Baba about a year ago, so I'm looking like an idiot. No, I'm just kidding. But so should I sell some and put some money aside, or should I trust the process? And basically, you built an empire where, okay, I don't need to sell because we're making $1 million a month. Let's go. But
we can refi tax-free. I mean, it's some people need to see the stuff in the bank. I've obviously tried to minimize my income as much as possible and try to go for that long wealth stuff. And now, I'm trying to that kind of planning is hard, but it's a great problem to have. I want to protect it, So, I do want to have a little bit of a, protected position there. I don't think, would I do the same thing I did again? I mean, probably not. I mean, again, having, but this larger facilities, yes, you have a category killer there. Yes, you're building, 3 or 4 sites at the same time. And yes, it works for scale, if you understand scale.
I understand scale.
Fair. But your buyer pool, smaller, you're taking, I had a ton of vacancy. I had brand new sites that were coming online, even in, there's seasonality. I had sites coming on in bad times,
November, December, yeah.
Yeah, I mean, you're taking that, you're taking that risk. You're taking the, the carry risk. It's, it's.
And they gave you an offer you couldn't refuse of what's this thing going to be worth in an ideal world 3 years from now when it's full? Show me the money, baby.
I had a ton of vacancy that I'd opened stuff in the last year, and they're telling me, hey, we'll give you a pro forma, a forecast for that, or less actually. I believe it was a 2.5 cap. On existing. So.
I'm literally sitting here speechless.
So
how are you gonna? You have a 5-year-old, a 3-year-old.
They got the box though. They got they got a couple of the boxes.
You have a 5-year-old, a 3-year-old, and a 1-year-old. How are you going to raise good kids when this just happened and this bomb dropped on your life? A blessing, a positive bomb. My fear, I'm on a whole nother level than you, but how are you going to struggle with grace being a father? And other areas of life are not going to be as easy as, your run in real estate this last 10 years, even though it's been a serious struggle, but the success is not always as evident, right? How do you think about that? I know it's a very open-ended question.
It's so hard not to be able to solve a problem. And hearing your kid cry is so different than hearing, another kid cry. It's your kid. It just goes to the heart. It goes to the, it's been. I can't tell you how different it's been. I mean, the time I want to share and do stuff with them. It's.
Your wife is probably thrilled that you're running around now doing about 10 asset classes trying to find managers, and it's crazier than ever.
Oh yeah, I think it's gonna be easier after I sell. I think it's gonna be easier. It's hard, and again, we really try to model. I mean, nothing's really changed for us. Mm-hmm. We just, I've asked my wife because she's more emotionally intelligent. I'm an only child. My dad was, a workaholic, amazing. We were closer later in life, but I didn't see him as a kid. He was, again, he was so hungry and so driven. He was out empire building, right? And again, I appreciate what he did so much, but. I didn't have, my dad didn't, wasn't taking me to school. I wasn't getting the park kids, my dad. I wasn't, my dad was working weekends, right? And he, again, and rightly so, but I mean, my wife says, go to the store, look at something you want, and don't buy it. And doing things like that and kind of creating these behaviors where you're not making impulse buys, where you're trying to set the right, I mean, even, we don't have a nanny currently, but even when we had one, are they speaking respectfully? Are they demanding, or are they speaking to her like part of the family? Is there respect there? I mean, what do you think? I mean, you're multimillionaire.
I want to teach my kids how to struggle with grace. I think, and I talk to so many smart people. I loved your answer just now. The kids who are given everything and the parents who solve their problems, those are the kids that turn into assholes. And I just don't want my kids to be assholes. I want them to. I want them to learn how to struggle with grace. I'm almost too hard on my little 3-year-old because I'm not just going to give in and give him everything he wants, even though it's ridiculous. I shouldn't fight every little battle. I love them. I hang out with them all the time, but I want them to if they do something wrong in life, I'm not going to be the dad that yells at the coach or calls the judge to get him out of a problem. I'm going to let them be held accountable and teach them how to work hard. So. But like doing that when life is different and you're staying at the Four Seasons and, you know, your level's a totally different level, but that's something that I spend a lot of time thinking about, and I don't know the answer.
I think boundaries are so important. Like, again, I didn't know this. Like, kids really need them. Like, it's you know, you think you're being a friend, you think you're doing, okay, go ahead. You're actually, you know, you're doing a disservice. Like, to me, that's, I don't know, not necessarily something I would have thought.
I love it. Oh, I have 100 questions here for you.
Can we talk about something about, you know, you have classes and you have one-on-one office hours with people. What other person of your magnitude, why are you doing this? Like, why, like, again, it's not worth it for you to spend an hour and spend time with all these different people. It's for these classes, I mean, you're not making it as much as real estate? Why are you doing this?
My business partner asks me the same thing quite often. No, I think when I think about my goals in life, it's to, I don't know what they are yet, but I know that an audience will help me achieve those goals. I want to impact as many business owners as I can in a positive way. I think as Twitter hammers me on the hiring overseas, I think that message, if I can just spread that one message to a couple hundred business owners in my life, I will have made a drastic impact on not only them, but their family history. Because hiring overseas is an amazing thing that can happen to small entrepreneurs just like everybody in this room. But no, I think a little bit selfish reasons too. Like you'll do a consulting call with somebody and they'll become a friend and okay, I can't close this deal. Nick, like here's a great deal. That's happened twice. Two people that paid me to look at a storage deal for them brought me a storage deal later. And there's plenty of storage deals. Me and Dan had dinner last night in a room of 12 people. I think I'd given advice to almost all of them. And they were kicking butt, like 2, 3, 4, 6, 12 facilities that they had bought. That's pretty freaking cool. But this is also just a very unique time. I want to use the last couple of minutes. Interest rates are up 300 basis points. I'm asking everybody what they're doing, what they're thinking about. I'd say 70% of people here are bearish right now. Compared to last year, we come here to Reconvene. I have 11 properties under contract. Everybody's kicking ass. Rates are low. Let's fucking go. It's like a huge party, right? Last night, we were at dinner, and at one point, we're all just looking at each other going, what's going to happen here? And if rates go up another 200 basis points and they stay there for 3 or 4 years, there's 240 people here, probably 40 of them, 40 of us could have serious problems. How do you think about this? You just doubled back down. I'm sure you've locked your debt or you got some bridge debt. Like, how do we think about this? Where do you see the economy going? I'm not going to be the one to bet against America. I think if I had to put money on it, I'm a 60% bull, 40% bear, but now that I have something to lose, now that I have investor money, I spend a lot more time protecting that downside. Yeah. That's why when new investors ask me for advice, I'm like, I'm not the guy you want to ask for advice because I'm risk off. I made a lot of freaking money the last 2 years. Why would I waste my energy trying to lose that or risk losing it? How do you think about it?
It's just funny how everybody thinks that you owe them stuff, you owe them advice. I mean, the amount of free advice, it just is, anyway, a lot of respect. I mean, honestly, Are you going to get on Twitter? Are you going to get serious about Twitter? I don't know. We're actually Light Bulb Capital Group now. We're actually trying to become a family office. We're trying to, instead of, hey, unknown private investor buy. So we're trying to create like, a better mousetrap, right? And again, before, like I was having to get on these calls with these sellers and, hi, I'm Jay, like I have a couple of stores, like they had no idea who I was, right? So, and I'm having to sell myself to buy these properties. And again,
and attract talent.
And attract talent, yeah, talent attraction, like we mentioned, was huge. I mean, I loved your,
I was talking to a small business owner and he goes, the best billboard you can place is on the way to your office for your employees to see. And I was like, wow, that's actually really important. Like having a brand that you're behind of, I'm going to work for William & Connolly. I'm going to work for Blackstone. It's like a big, big deal.
Especially in today's, oh my God. I do think prop tech is not that it's not big now. I do think the reliance on that. Actually, my friend here, Chris Marino, Mr. Prop Tech. Raise your hand, Chris, if you're here somewhere.
We can't see anything, so hey.
He actually, one of his first companies was Laundry Locker. Then he Luxor One, the package delivery, which has become like a staple for all multifamily. Which again, I wasn't as much of a multifamily person as I am now. Well, you all probably know more than I do about multifamily. It's, and now he works for Zeal, which they do electric charging, XEAL, but he also, he's like the U of prop tech. Like he advises founders on boards. He invests. So anyway, but it's just really interesting.
And he's doing that off the back of a personal brand that he can leverage. He can get access, and you think that might be valuable? I mean, the way my personal brand has changed my life. Half my hires, we have 52 people now or more at our company. I lose track. Many of them came through Twitter. Almost, I'd say, indirectly attributable, 70% of the people who work for me came through Twitter. A lot of our deal flow, we've raised $30 million, almost all of it came from Twitter. Obviously, you don't need a lot of those things because you've done it. So maybe you look at it as, I don't really have a lot to gain if I go online?
I am worried. There's concerns, right? Like there's times where I want to comment. I don't want to be taken the wrong way. Like, again, there's...
You don't want to get canceled? I'm not worried about that, obviously.
Honestly, multifamily too is different. Like there's people that, I've heard some interesting stories when you kind of mess with, when you're involved in the way people live, it's different. Storage.
Yeah, we made a couple $1 million. We raised everybody's rent 30%.
Yeah.
Oh, that doesn't go over well, right?
No,
it's supposed to be a joke.
There's no joking, right? And there's a whole council kind of all landlords, and is there, I don't know.
The internet's a scary place for landlords. Absolutely.
I really, I do think we need more of the, there's enough for everybody, there's enough pie. I feel like there's not that, for example, you sharing your secret, your blueprints. That's incredible. I feel like that's not something that would exist in previous, years. Not just you're talking to other people, but again, you're sharing your technology. You're sharing, again.
And you think that has moved the self-storage market?
Completely. People, again, look at your followers. If every one of those people talks to a couple of people about it.
I guess if you've been following me for a year, then maybe there are a lot of people that I don't even know that are getting more bullish on storage because of my tweets.
I think it matters. I do think, I do think there's gonna be more reliance on prop tech. I think with the wages and everything going, I think, multifamily has not seen the same disruption as storage has. I think there's there's some operational, there's some operational leverage you can pull in multifamily to add value, you're saying? I think it exists, and I think there's smarter ways to do, and I think there's better ways to kind of mess with the ways people are doing things. Again,
are you going to buy a property management company?
Oh, it's too much work. You have to deal with people. No, what do you think? Property management, everyone I've spoken to is either getting out of it because of how hard it is to hire. Their margins are kind of going down. I
can only speak on self-storage, but I think one of the biggest risks in self-storage right now is that allocators are not putting aside enough money to feed their management company in a healthy way. And if you enter a recession when rents are flat or vacancy's high, or you just have to hit these damn projections that you had to underwrite to buy these deals, and you don't have enough money to hire good people to manage your properties, I know that I charge a higher management fee than any other self-storage operator here, and I know that I barely make money doing property management, and I would not do property management third party, if that tells you anything.
Very much so.
So it's a hard business that has been neglected, and it's easy to neglect in a good time. When things are really ripping, it's really easy to say, oh, I don't need a profitable management company. But if you're not getting paid, if you're not doing deals, if you're not doing refinances, you got to pay your people. And what's going to do it besides for management fees?
Right. And that's again, the incentives aren't really aligned either. If you save people money on expenses, it doesn't, it's off the gross revenue, right? So there's not complete alignment. So it's interesting.
So you're going to spend the next year of your life getting organized as a family office? Is that your plan?
I do think having cash on the sidelines for kind of what transpires, I don't think it's going to be long. I do think office is going to come back. I think
you're sitting heavy cash right now?
I think so. I think that's the move. I think, obviously protect it for your positions, but I do think
low leverage.
Not
what
not
would you say
over-leveraged.
LTV you'd feel comfortable? Like there's a GP out here who's buying a multifamily deal, storage deal.
Yeah.
If you're extremely well capitalized, you don't need a ton of leverage. But what do you think? That's the demise for all of us, the great demise.
I think so. I think the focus on IRR is going to have to change in obviously the short term, right? again, show cash on cash, show cash flow, figure other ways to.
Well, that just went away with these interest rates, so we really can't buy anything.
Right? Yeah. But I do think with office coming back in a way, which again, I think we'll get there. I feel like all those investors kind of going off to the sidelines has kind of pushed everybody to the same kind of markets, the same kind of, kind of way. Well, I think that'll change. I think that'll soften. I don't see rates staying this crazy during the election.
Yeah, let's do something that I'm going to hold you absolutely not accountable for. 2 years from now, interest rates right now, 6.5%. Where are they 2 years from now? If you had to make just a wild guess.
Again, barring unforeseen, I do think I think they're going to kind of normalize and go down from where they are today. I just do. I just don't think it's feasible. Every refinancing is going to. I cannot see them going as aggressive when there's an election term. I just can't.
Let's end on that. I hope you're right. No, Jay, this has been phenomenal. I hope I did okay trying to get as much value out of you. You're an excellent guide interview and idol for many people here. A ton of respect for what you've done. It's absolutely incredible, man. Thank you for sharing your knowledge right here on the stage with us.
Well, thank you, Nick. Obviously, you're also the person everyone came in here to see. Such a rock star.
Juniper Square, the sponsor of this show, recently conducted some research to help you understand what real estate investment managers are doing to build stronger relationships with their investors and earn more referrals to new investors. Their new special report includes data on topics such as what factors are the most important for building investment relationships today, how technology is being used to provide a competitive edge, and the one technology integration that is driving more repeat investors and more referrals. To download this for free, visit junipersquareresearch.com. Again, to get this report for free, visit junipersquareresearch.com. I just wanted to let you know that we have a paid real estate community with over 500 members. Not many people know about this. It's on Facebook. It's an inside look into my business and many other business. It's skewed towards self-storage, but there's also a lot of other commercial real estate investors in the group. We're pinging ideas off of each other. It's just where I share a lot more intimate details about my business than what I share on Twitter or on this podcast. So if you're interested in this and you want to meet other people, there's been people investing in each other's deals on there. There's been people share deals that other people bought. It's a place where a lot of cool stuff is happening. If you're interested in this, visit sweatystartup.com/REC, as in real estate community. sweatystartup.com/REC. There's a free trial as well. You can check it out for a week for $1.